Today, let's talk about RWAs, real-world assets, the institutional bridge to a tokenized future. A profound transformation is underway in the world of finance, one that promises to connect the vast, stable value of the traditional economy with the hyper-efficient global infrastructure of blockchain technology. This transformation is the tokenization of real-world assets, RWAs, a movement poised to unlock a market projected to reach a staggering $16 trillion by 2030. It represents the construction of an institutional bridge, a structure that is finally allowing Wall Street's titans to bring the world's tangible and intangible value, from real estate and private credit to art and intellectual property, into the digital age. At its core, RWA tokenization is the process of creating a digital twin of an asset on a blockchain. These assets are the pillars of the global economy: commercial buildings, government bonds, corporate equity, and even future royalty streams from music. The journey from concrete to code is a meticulous blend of legal and technical craftsmanship. It typically begins by placing the physical asset into a legal entity called a special purpose vehicle, SPV. The ownership shares of this SPV are then converted into digital tokens on a blockchain like Ethereum or Solana. This approach cleverly fits within existing securities laws, making the tokens legally recognized shares in the company that owns the asset. To ensure the digital token's value remains tethered to reality, Oracle networks like Chainlink or Pyth network play a crucial role, feeding real-world data, such as rental income or updated appraisals, to the on-chain smart contracts that govern the asset. The motivation behind this complex process is the pursuit of transformative benefits that rewire the mechanics of finance. The foremost advantage is the injection of liquidity into traditionally illiquid markets. Assets like private equity or commercial real estate, which can be difficult and slow to sell, become easily tradable 24/7 on a global scale once tokenized. This is closely tied to the power of fractional ownership, which dismantles the high barriers to entry for premium investments. An investor with just a few $100s can now own a piece of a previously inaccessible asset, receiving their proportional share of its income directly to their digital wallet. This digital alchemy also brings radical efficiency and transparency. By automating processes like dividend distribution and compliance checks through smart contracts, tokenization eliminates layers of costly intermediaries and creates an immutable, real-time record of ownership, drastically reducing settlement times and the risk of fraud. This potential has not gone unnoticed by the giants of traditional finance. The narrative has shifted from a niche crypto experiment to a strategic imperative for Wall Street. BlackRock, the world's largest asset manager, made waves with its BUIDL fund, a tokenized U.S. Treasury fund on the Ethereum blockchain. They, along with pioneers like Franklin Templeton and J.P. Morgan, have embraced tokenized U.S. Treasuries as the perfect Trojan horse for RWA adoption. These low-risk, high-yield assets are building institutional comfort and, more importantly, the foundational infrastructure, custody, compliance, and trading mechanisms that will soon support more complex assets. However, the path to this tokenized future is not without its perils. The primary obstacle is a fragmented and uncertain regulatory landscape, where the legal status of a token can differ dramatically between jurisdictions. A fundamental legal challenge also remains, establishing a definitive, court-recognized link between owning a token and holding legal title to the physical asset. Furthermore, technical risks, such as smart contract vulnerabilities and the operational challenge of securely managing the underlying physical asset, must be meticulously addressed. Despite these hurdles, the future looks increasingly on-chain. The next wave of tokenization will encompass more exotic assets, from music royalties and film rights to carbon credits. The most revolutionary impact, however, will be the symbiotic integration of RWAs with decentralized finance, Stable, yield-bearing RWAs will serve as superior collateral for DeFi lending protocols, making them safer, more capital efficient, and vastly more appealing to institutional capital. This will pave the way for a new generation of financial products, where the stability of real-world value underpins the innovative power of DeFi. The construction of the institutional bridge is not merely a trend, it is the foundation for a more unified, efficient, and democratized global financial system. Thank you for listening, and have a financial bright future.